Has that been something that you've noticed while you covered the last 40 years, that this realization has somehow come up and become more of importance?
Actually, I notice what I call modern corporate finance is it's the end of the relevance of earnings, the death of accounting. Ruklev has a book. It says that the statistical correlation of earnings and stock prices used to be something like 50% in 1970.
Mhm.
Today, it's almost zero because 30% of publicly traded companies in the United States have negative operating cash flow. In other words, they're actually losing more money each year, and something like 3/4 of those companies are actually going up in value. The larger their losses, the larger their market caps. So now I would say no, the world's smartest investors don't care about earnings. What they care about is investment. The investment, I'm going to ask you a question here. There are two variables which explain stock prices, U.S. stock prices, better than anything else over the last 50 years. And their correlation has gotten progressively stronger. What do you think those two variables are?
That's interesting. Is it the PE ratios?
It's an outcome. I mean, the PE is what you're willing to provide. We have 30% of the companies have no earnings, so their PE is infinite.
Yeah, the PE is not going to
Not
be.
PE. Okay, it's the increase in R&D. R&D in America has gone from 1% to 20% of assets in the last 50 years. So it's the increase in R&D and it's the increase in SG&A, selling, general, and administrative expense. That number has gone from 25% of assets in 1970 to 55% today. And you know what's in that number?